Before we get started, I'd like to go over a few housekeeping details. As you know, this is the third in our series, and we have more to come. We currently do not have those dates set, but stay tuned for emails, social media, and posts on the NCCPAP website to learn more about when those next events are. For CPE information, please contact the NCCPAP National Office, and Alex's information, both her email and phone number, are here. So if you need anything further about the CPE information, that's who's in charge of that. As part of our session, we have 4 polling questions. They are all required for you to receive your CPE credit, and you'll be prompted for those questions by me. I will read them to you. They're very short and they're all multiple choice, so that should be hopefully no problem for anyone to answer those. The next items is how you pose questions to the people who are presenting. For the people who are presenting, there'll be a Q&A after each segment. To ask your Q&A questions, you don't have to wait until the segment's over. You can ask them at any point in time. As part of your Zoom function, there is a Q&A, and if you scroll or if you just go to the bottom of your Zoom window, you'll see Q&A. It should be all the way to your right. That's where you would pose a question for one of the presenters. I want to distinguish this from chat, which you're all in now, and you're all saying hi to each other and hi to me, and you're getting messages in the chat. The chat is really to talk to each other, to ask for something specific, but the Q&A is really designated to ask questions for the presenters. The only other thing that I want to point out is that in chat, you would have received a link, and that's how you can get your slides and handouts. And I'll show you what that looks like. Many of you like to listen to the recordings after our sessions are over, and the recordings can be found on the NCCPAP website. So let me show you what that looks like. The link would take you right here. And if you went there right now, you could get the PowerPoint slides by looking at that button that says PowerPoint slides. Probably 2 days from now, perhaps 3 days, the webinar recording will be available also on this same page. It's not available now, but in a few days it will be available. So that's where you can receive the recording. The only other housekeeping item that I'd like to talk about is about a survey. At the end of our session today, a survey will automatically pop up in your browser window. Mostly what the survey is for is to give us feedback about today's session, but also about future sessions. If you or someone you know would be interested in being a speaker or a presenter at a future session, that's where you can let us know all about that. So thank you again. And what I'm going to do now is I'm going to turn this over to Mark Stewart, your NCCPAP National President, and he's going to talk about the NCCPAP Scholarship Fund.
And good morning and welcome everybody. It's so good to see so many of you, although some of you should probably still be taking well-deserved vacations this time of year, but nonetheless, it's still good to see you all, and thank you so much for attending today. Before we get into what's going to be a overall update about our recent visits with DC representatives, I just wanted to highlight a NCCPAP scholarship that's still available. It's a $1,000 scholarship named after Carol Markman. And Carol, don't mean to embarrass you, but it's well deserved to be named after you. The scholarship is for current NCCPAP members or a direct descendant of a current NCCPAP member. You will see the link there to go and apply for the scholarship. Note when you click on that link, it will prompt whoever you're working with to become a student member of NCCPAP first, and thereafter they will have access to the scholarship application. So please take a second, really everybody, to go and look and see what that scholarship is about, and see if there's anybody within your immediate family or even your extended family that might be interested in such a scholarship. I would also like to note that NCCPAP accepts donations to its scholarship fund for future donations. Those could be made at any time. They can also be made during the renewal process. But we encourage you to take a look at that as well. We really want to make sure that we, get this money out there to deserving students. And obviously, the more donations that we get, the more capabilities that we have to have more of these type of scholarships in the future, which I think are really worthwhile, not only, for just NCCPAP members, because we have other scholarships outside of the scholarship as well. But just for the general good of NCCPAP, I think it's important that we're just not an organization that does CP seminars, although these sessions like this are important, but that we also do good for the future of accounting, which is why I think these are so important.
Now we're going to move back to one of our main topics today, and that is the NCCPAP meetings in Capitol Hill. So for that session, we're going to have that hosted by three people. Mark, who is your NCCPAP president, Steve Mankowski, tax co-chair, and also Sandy Zinman, the other tax co-chair. And we're going to have Mark Stewart lead the discussion. So Mark, we're going back to you now.
Excellent. Thank you, Fran. So, before we get into the meeting guts of this, let me just kind of set, some parameters as far as what our expectations were while we're down there. Of course, we are all aware of the serious lack of funding that the IRS has. As you've seen in the news, we're aware of the document destruction issue, unfortunately, for information returns at the IRS. And we're all well aware of the extreme IRS backlogs, the fact that they don't answer phone calls, et cetera. And just note that during these meetings and everybody that we met with, we brought this up and we stressed this over and over and over again. Obviously, you're not going to get answers from them that we're going to fix it immediately and we can give the IRS all the funding that they want tomorrow. These things take time, unfortunately. Even if they listen to our request and other CPA organizations' requests, it's not as if the funding is going to come tomorrow. So we all have to realize that we're going to be stuck with an IRS that's going to have functional issues for a while. It's not pleasant. It's not an issue that you want to hear. It's not, the way we want to operate makes it very difficult for us as practitioners, but we are unfortunately going to be stuck with that. There is not a single, representative that we met with that said, absolutely not, we don't want to give funding to the IRS. But as you know, it becomes a highly politicized issue. So just note we brought that to them, because I'm sure at some point there'll be, questions and comments as far as whether that was brought up. And that was most certainly brought up at these meetings. You will see on the screen there the representatives that we met with. Do note that we reached out to a whole host of representatives. And obviously, beggars can't be choosers with this stuff. We only can meet with the ones that, did decide to meet with us. Keep in mind very often, this goes for any group that goes down there, you very rarely meet with the representatives themselves. It's almost always some manner of chief of staff or policy affairs issue or someone like that. But the God's honest truth is, and I already see the comment in the chat about no Republicans. Again, that was not intentional. Just like I said, we went out and, it's whoever would accept the invite. I knew that comment was coming in the chat. But as I was saying, sometimes meeting with the actual legislative affairs folks and such, it's almost better than meeting with the representatives themselves. You'll hear me use the comment often, earworm. And the concept of an earworm is when a song gets stuck in somebody's head if you say it enough over and over again. And that's kind of the idea. We want to put these issues in enough people's heads on the ground that hopefully we maybe get one that gets stuck in somebody's ear and maybe finds its way jammed into a larger piece of legislation. Because that's what you're looking at here. None of these issues are ever going to be more than likely in a bill on their own. You're trying to hopefully get them into some larger bill. And the more times that we can kind of, jam these issues in, hopefully it gets stuck in somebody's head and hopefully it gets in the bill someday. And that's, kind of what we look to do here. So we brought various, issues, to the Hill this year. Understand that some of these issues are things that we think are practical and could get done. And some of them honestly are wish list issues. Sometimes we just want to highlight when things are wrong. And I'll kind of tell you which ones I think are ones that have a possibility and which ones don't, based on the reactions that we had in the rooms that we were in. It's kind of interesting which ones stuck with folks and which ones folks found new and hadn't heard of. It's actually very interesting to go through. So the first issue that we brought up, which I'm sure is an issue that you're all literally dealing with right now, is corrected 1099 packages from brokerage houses. I'm sure you're all sick of seeing the 1099 corrections coming through now, where there's a $100 correction to dividend income moving into qualified dividend income, or a $50 dividend that was forgotten. And now the client gets an amended 1099 package, and you're stuck explaining to them why it's de minimis and why nothing needs to be done. And the panicked client insists on you having something done, and you explain to them that the extra $20 refund they might get will cost them $1,000 to correct that tax return. We did mention how preposterous this was, to folks. And our recommendation was actually very simple, was to try to put forth some sort of legislation, some sort of ruling that would have a de minimis exemption for brokers whereby they would not issue corrected 1099s. We did feel that this, one of the things, and you're going to hear me mention a lot scoring. A lot of times if these bills are not going to score neutral, they're going to be against them. This is one of those things where a lot of times the corrections have a $100 correction one way in favor of the taxpayer or $100 against the taxpayer. So we thought this is a really practical solution. It is something that, we would want them to hopefully do. Whether they'll do it or not, I don't know. This got a little bit of mixed reaction in the room. So we'll see, if we get anywhere with this. They did mention to us that this was for, we like to hear it's the first time they're hearing the suggestion, which is good, that we're not giving them the same old suggestions all the time. The other thing that we did also suggest while we're in the room, and I'm sure you guys, have this frustration as well. We often get 1099 packages that are woefully insufficient with the amount of information that we need. I'm sure you've gotten 1099 packages with tons of municipal bond interest income, but no indication of whether it's in state or out of state of the person's resident state, or you're trying to claim a foreign tax credit and does not give you the amount of foreign dividends within the portfolio or not. So we did ask, again, if there could be some pressure to make more information mandatory on 1099 packages to hopefully decrease the burden on us both during tax season and after tax season. This next issue here, we very respectfully call the Don Ingram issue. As many of you know, Don Ingram was a longtime friend of NCCPAP, a stalwart of NCCPAP, and really did so much for the organization. This was an issue that Don was very passionate about. It's one of those where, again, you can hear me use the word scoring. It would not necessarily score well, but we always wanted to have it in the agenda because, Don really wanted this issue to live on for him. The issue concerns deductibility of long-term healthcare premiums. As many of you are probably aware, for the most part, regular health insurance, assuming other small parameters are met, for self-employed individuals are allowed as a full above-the-line deduction. However, long-term care premiums, which are as important as health insurance for folks these days, are not fully deductible. They're severely limited to a dollar amount by statute and also by age. And very often, if the person doesn't get it as above-the-line deduction, they are not going to get it as an itemized deduction, especially now. Given the fact that there's an increased standard deduction, often people have no availability to get this at all. So we did, try to push in the room, how fair this was against folks that are actually trying to do the right thing when they go and get long-term care insurance. And, this really discourages them. So, this one's for Don, as the saying goes. This one's for Don. Again, you do get in the room, you're gonna hear me say this a lot, that they don't feel that this would score well. But again, sometimes we just want to let them know when things are unfair in the code. And again, hopefully somebody takes it up as an issue. This next one, I do wish my friend Neil was here today. We often call this the Neil Fishman Act, lovingly, amongst our group. It's known as HR 4184. It's the Taxpayer, Perfection, and Proficiency Act. As many of you know, there was an initial attempt to regulate tax preparers. The analogy that I often use, and I also say this lovingly, I have many folks in the beautician industry in my family. And I tell people all the time, it's a lot easier to get licensed as a tax practitioner, meaning none, you don't need any, than it is to even cut a head of hair, in most states. And we try to bring up how ridiculous this is these days, how many unscrupulous tax preparers are out there, and how this issue needs to be revisited post-Loving case. To get some sort of sane regulation of tax return preparers out there. The other thing that we also try to mention in this, that we've pushed for a while in NCCPAP, is to allow some manner of above-the-line deduction, even if it's small. I go back to the educator deduction, which is $250, but every educator wants to claim the deduction. Even a small deduction would require people to at least disclose who their tax preparer is. And at that point, hopefully bring more unscrupulous tax preparers into the light. So this one, again, kind of mixed reviews in the room. They've all heard of this. They all think it could become part of a bigger package. So we hope that it does. And as always with these issues, fingers crossed as we move forward on this issue. This next one is actually a small one, but actually one that's a real common sense one. This is HR 4214. And this is basically a Tax Deadline Simplification Act. I'm sure many of you have dealt with clients when you're telling them their estimated tax payments, and you have to explain to them there's an estimated tax payment due in April, and then one that comes right up in June, and then September, and then January. You're trying to explain to the client that these are quarterly payments, but they're not quite due quarterly. So this is a very simple act. It's not very long. It's about a page long. And it, basically says, look, let's move these to real dates after end of quarters. Let's do April 15th is fine. We should be doing July 15th, October 15th, and then the following January 15th. The only objection we ran into in the room when it came to this is you are dealing with a fiscal year end within the government, and moving certain dates could potentially move the dates when it comes to that. So I don't think the move of the date to July 15th is the issue. You might have an issue in moving the date from September 15th to October 15th and crossing certain fiscal periods in the government. So that's where this one, did meet some opposition in the room. Again, they took it under advisement, and we'll see where it goes. One issue that's loosely related to this, and has been in kind of legislation related to this, is the issue of 2D barcoding, which actually did get very well received in the room when we spoke about it. For those of you who are not aware, and several states have this already, if you print a paper tax return in several states, that paper tax return is little 2D barcodes printed on. Those 2D barcodes allow the states to take those paper tax returns, put them through a scanner, and essentially have an electronic version of that tax return almost immediately. Now, this has been kind of a hot button issue in Washington because the IRS has actually, believe it or not, already been somewhat tasked with doing this already. Just something they really haven't gotten around to, and it could be a funding issue, it could be a time issue. But this one really got traction. This would really, really reduce a future paper backlog. And that's what we're looking to get at here, guys. What happened during the pandemic with the paper backlog, it happened already. And there's only so much that can be done to fix it. What we want to do is fix it going forward. That's going to be the important thing. And hopefully, things like 2D barcoding can fix that going forward. This next issue here is one that's really near and dear to me. And this is one that by far was most well received in the room when we spoke to people, and also was an issue that almost to a man or woman, they had never heard this issue before. And that's why it's important to highlight. For those of you not aware, I'll give you kind of a brief synopsis. The IRS issued this notice 2021-49, and this was back in August 2021. Now, there was a lot in this notice, but the one kind of jarring thing in this notice is for a long time, we were all begging the IRS for the answer to the question, if I have a small S corporation and I, by law, am required to issue salary to myself and potentially to my spouse as well, am I allowed to claim the employer retention credit on my own salary and wages? Got to remember the CARES Act started with the employer retention credit back in late March of 2020. So you had potentially 6 different quarters that people were claiming this employer retention credit. In August, this notice came out, and the IRS came out with a ruling as follows, and I'm paraphrasing. It essentially said that you can claim the employer retention credit for your own officer owner wages only if all your living family members were not living, they were dead. And this is one of those where we read initially, we said it couldn't possibly read this way, but it did. It actually harkened back to nebulous language in the CARES Act, which the IRS kind of strung together to come to this conclusion that you can only claim this if you had no living relatives. This shocked every single legislative affairs person that we met with in the room. And we had several that committed that they would bring it to their teams directly and try to get some sort of legislative fix to this. So we were very heartened by that. The other thing that we mentioned to them as well is if they could not get this decision reversed in some sort of legislation, to at least have some manner of penalty relief. Remember, this got issued in August of 2021. You potentially have folks that did this for 6 quarters and potentially only have to pay back 6 quarters, but pay back 6 quarters plus penalty plus interest, which is really difficult and really punitive. In addition, we really even haven't seen any rulings from the IRS as far as how to do this. We did explain to the folks on the Hill that amended 941 returns can only be done by paper. If you're going to require people to do this, you're going to get 6 quarters of paper filed tax returns, paying back these dollars, increase into the already ridiculous IRS paper backlog, which they also took under advisement as well. Issues that could potentially reduce a paper backlog, they were very interested in. So as the term goes, it really did take a shining to this issue. We have 2 different legislative affairs folks in particular that asked us specifically within 2 weeks for us to get back to them and see if they made any progress on this. So we're really excited about this one. We hope this one can get some sort of correction. So fingers crossed, everybody. And again, this is a group effort. So particularly because this one might have legs, we encourage you to write your local representatives on this issue because we really feel that this one can get pushed forward in a real meaningful way. This last issue is one that's near and dear to my friend Steve, but also important to me as well. As you all are aware, identity theft is still very rampant, and CPAs are still always targets of identity theft. We got to remember something. If somebody steals your information and files a fraudulent tax return, they can't do anything unless they have your bank account information to actually route the fraudulent refunds to. So we've been suggesting for a long time, this has been an issue that we've, I would say for at least 5 years, maybe longer, have brought up as an issue on the Hill. And it's a concept of pre-noting of bank accounts. For those of you that are of Social Security age, or our family members that are of Social Security age, this is very much the way the Social Security system operates. The very first time you get a Social Security payment that comes in electronically, your bank account has to be pre-noted. You get a verification of your bank account. It's a couple of penny transaction, debit, credit, that sort of thing. You go in and you confirm your bank account information before the refund is actually issued to you. We did explain to the representatives this should not delay refunds. This could happen during the statutory 21-day period while they're verifying refund amounts. This also was very well received in the room, especially since there's a system in place through the Social Security Administration to do this already. And they very much understand, okay, how much tax return refund theft there is out there and how we're the targets of us and how a very simple thing like this, okay, would massively cut down on the amount of refund fraud, okay, not only helping us out, helping taxpayers out. So this is a vitally important issue, well received in the room. So hopefully we can, keep moving this issue forward. And again, this is one because it was so well received and we got commitments from legislative affairs folks to bring the issue forward, to read up a little bit about it. By the way, we have full write-ups of all these issues, which will be in the library for this event as well. So please read those and we'll give you a base for conversation if you're going to be trying to reach out and speak to your local representatives on it. This last issue was just spoken about in general. Right now, I'm sure a lot of your clients deal in crowdfunding. A lot of them are probably not aware, okay, that there's potential situations where the crowdfunding is taxable. So we did ask that there be some manner of further guidance as to how and when it's taxable, okay? Also, we did mention, and I'm not going to get into the weeds of it now because it's too long a discussion, about when and how 1099s would be issued in circumstances like this. and if the IRS should consider moving or changing thresholds in this area. It becomes very difficult to report every little small amount of dollars somebody might get in a crowdfunding situation or other types of small dollar situations, and how that would, again, not only make our lives difficult, but make the IRS's life difficult as well in trying to audit these items. This was also very well received in the room. The issue becomes obviously the devil's in the details, right? How do you draw up legislation on this? So I think in future years, and this is where we always like to receive input from the group, and it also leads into where I get into my next slide. We need volunteers, as always, okay, when we go to Capitol Hill next year. The more volunteers we can get, the better we can go with more issues, more robust issues, and also can bring more specifics on these issues. The wider swath of people that we get to come down with us, the more we can get a kind of wider group of ideas out there and newer ideas out there. And it really helps us with the meetings out there. We're currently fielding volunteers for our next trip to DC. For sure, we're going to be going there in May. We might go back sooner. Also note that NCCPAP has several different programs out there that will help pay in full or in part for your trip to DC. So please look, within your firms. It does not have to be a partner or owner of a firm. We would love to have staff people, even brand new staff people, bring them down for a fun time in DC. So please reach out to our national office or to me directly if you'd like to attend DC next year, and we'll get you more details on that as soon as we can.
Mark, thank you. You were very thorough. I'd like to now introduce Steve Mankowski, who is our National Public Liaison with the IRS. And we're going to turn this over to you, Steve. Thank you.
All right, thanks, Fran. Thanks for all those that are in attendance today. Just going to give a brief update on some things that have been coming out from our monthly meetings with the IRS and the National Public Liaison Office. One of the first issues that we've spoken about the last 2 or 3 meetings is dealing with IRS Error Resolution Systems, or ERRS. And we all know that was a major problem last year, being the 2021 filing season. And what the IRS fortunately has done is they've seen that as a way to find some improvements. Last season, it was a manual process, but they did realize that systemic solutions could help to create efficiencies. And they have put into place many of the items. They still need to be cleared manually, but they have realized that they can go through and get things, the processing aspects of it can be done through their systems without having it being a totally manual process. I think we all had our clients that were complaining that when it was taking 12, 14, 16 plus weeks to get refunds last season, that dropped significantly this year. And there are only a few that I can recall on my end that really had any sort of issues. And it's at a point about roughly 5% of errors go into the ERRS system. Last year, it increased to nearly 20%, primarily because of the refund credits and the stimulus payments. The highest volume codes, as you can see, deal with earned income credit, the refundable child tax credits, and the stimulus money. And what the IRS did, they created a program that they're calling Fix ERRS. This past season, the rates fell from 20% to roughly 11 to 12%. While it may not seem like a lot, they've been able to fix 2/3 of the problems very quickly. Inventory last year was well over 7 million returns, and with about 1 million had been selected and then still had the balance that were unassigned, and they had to get work through their system. What's taking now with the Fix ERRS was they've eliminated these unassigned returns. And now it's taking closer to 3 days in order for the turnaround time of these errors, as opposed to the 12 to 16 weeks. They're handling thousands of cases per hour, as opposed to about 100 per agent. It really has helped the process. And it's one where the IRS was feeling the same pain as we were feeling, because it was just a backlog that they really hadn't anticipated. And because that program was so successful, now they're looking at to see what other types of return issues can be added in for the 2023 filing season. This is really a case where they saw there was a problem, and they really have taken significant steps to resolve the problems. And for that, I know on my end, I'm quite thankful, and hopefully that the IRS will continue to help eliminate some of these problems. We still had the issues with phone systems and getting calls through, but these 5 error codes created a significant number of practitioner and taxpayer volume last year, which has now been dramatically decreased. Within the exam and audit arena, the IRS has been hiring. They brought in roughly 1,000 new agents, looking for another 100 plus. The hires that they had brought in back in 2020, they're now working and training on corporate returns. The new hires that came in during 21, they're working on individuals. They want to start off and work the agents through and make sure that they're comfortable with a certain type of return. And the individuals, for the most part, tend to be a little more basic and easier to follow than obviously corporate returns, especially since there's a lot more source documents for the individuals that they can look at as part of the process before they start looking at all of the client submitted information. And one point to make as far as hiring, obviously the IRS has been having the same issues that all of us and industries in general have been having, is finding people that really want to work. And they have been having some decent success, but they're at the same point as everybody else. Trying to find people is a difficult process. Trying to find people that are willing to work and deal with everything through the IRS and go through all of the training is really a different story. As far as their training team goes, they're really looking at their process and really trying to make it a little bit more efficient. Every year they have a new attention or a new focus, and that's really where they try to send some of their training and really try to direct the training for that year to any specific area. And that's the ongoing training that exists, not just for new hires. Within the National Research Project, that's where audits are determined for tax gaps, workload models. They've been using AI data analytics to really go through the returns. In the past, there may have been some reports that I know Francina sent out regarding the other prior meetings with the NPL, where we talk about different schema that the IRS has and different statistics that they look at in order to determine which returns may get selected for audit. That's now gotten much more advanced with the use of AI, and their analytics continue to get better. The AI is just really helping them to really draw a better focus. Exam is also looking to incorporate the taxpayer digital communication process. TDC, it's one that was put in within probably the last year that really has helped, whether it's getting electronic POAs on file and just having a little bit better ability to provide documentation. And part of this process they've also found is that they're now able to expand some of the callback functionality. Whenever calls reach, the hold times are reaching 15-minute wait times, that's what generates the automatic callback features. Unfortunately, within their system, they know there's only a certain amount of time that people would be permitted on hold. We've all joked about the 2-hour courtesy disconnect, but we need to keep in mind that there's still times that we call in and we're not getting through, we're not getting the automated callback. That's because within that window, the IRS has hold times that are extending to the point where they'd be at that 2-hour window. So it's still a matter of patience to get through within the IRS, but it's one where hopefully things will keep improving a little bit. Another area that's been helping has been when a taxpayer has been inside of their system, they have the ability to use what's referred to as chatbots. which gives them the ability to upload documents. And a lot of times they're able to get some issues resolved within a matter of minutes, as opposed to sitting on hold for extended periods of time. Unfortunately, those chatbots aren't yet available for the tax pro community. That's one where stay tuned. It may be coming down the line, but they need to get some of the bugs worked out. And as far as the whole tax practitioner and tax pro areas within e-services. One of the things that we've seen is that the IRS it's been on the news quite often that the IRS is getting employees loaned in to help with some of the backlog. And they've been going and taking employees that in some cases were retired employees that they were able to convince to come back for a short period of time, or people that have moved on to other departments. The people they're bringing back into the mix are people that have worked in those departments that can really help get them back into getting much more caught up. Another aspect to kind of close this section out is they're working on a new 1099 portal that will allow the ability for 1099s to be uploaded outside of using the FIRE system. They're expecting that some point in 2023. And the good part is, one, it will be available for tax pros as well as taxpayers. And two, it's going to be designed so that it'll allow the data to roll from year to year. So if I send a 1099 out, 1099 NEC out to a vendor, the following year, if I've done had payments out to that vendor, their data will still be there, and then it's just dropping numbers in, as opposed to having to go through the entire process again of entering the names, addresses, etc. Quality opportunity zones. Taxpayers have needed to file Form 8996. If that form isn't completed correctly, there's different letters that will be going out and have been going out. First is 6501. If it's not completed correctly, 6502 if an EIN is missing, and 6503 if they failed to report a deferral as far as getting the project up and running. Paper processing. Some of this we've already covered already, so I'm going to go quickly through this. We all know that there's been a major backlog within the IRS. Fortunately, through the coalition, we've gotten a lot of the notices stopped. Bear in mind that when they do start up, and before they start up, we're supposed to be getting notification, which we will be getting out to all of our members to make sure they're aware that notices are going to start coming back out. Keeping in mind, a lot of the errors that the IRS is seeing this year still relates to the rebate recovery credits and the advanced child tax credits. And it's one where the IRS is working to get those better. As a lot of it's being covered through that fix errors, but it's still one that on our end, we still need to work a little bit better to make sure the data that we have that we're getting from our clients is accurate. And the Where's My Refund tool is being updated to reflect refund changes relative to the various errors. That's basically covering the areas that I needed to cover. At this point, if there's any types of Q&A.
Yep. Please enter those in your Q&A box if you have any additional questions. Here's a question. What about the 30 million missing returns? That was a question from Michael Rubenstein.
Yes, and I don't know if that's a real question or a tongue-in-cheek question. That is one issue that I don't think we will have to press on anymore. As you've seen, that has gotten an amazing amount of press, okay? Very rightfully so. I do not think this is an issue that is going to die quietly on its own. Now, unfortunately, as practitioners, we're going to be stuck dealing with this issue. Because as you've probably seen several times, they constantly reference, well, don't worry about the types of returns that are destroyed. It really is not going to result in any notices or mismatches. And we all know that that's not true. So unfortunately, one, they've already done the damage already. There is no getting those returns back. So we're going to be stuck dealing with those. There's going to be some matter of notice, and it's going to be a discussion with the IRS. Yes, we sent you the paperwork already, and they're going to say they didn't have it. So this one is actually a real bona fide scandal already, as you follow in the news. So yes, we spoke about it while we're in Washington, but yes, I don't think it's something that's going to require much pressing from us or any other organization, because there are already several different, congresspersons on very important committees that are very angry about this issue. So this is just stay tuned to the news on it. And Steve, I don't know if you had any further comment on that.
No, and that's one that the unfortunate is that all they're saying is informational returns, but they're not saying what types of informational returns. Because in some respects, some of the pass-through returns may be viewed as almost informational because of the pass-through aspects to the shareholders. So they haven't given enough specificity, I think is the word, as to what the returns were. They may not even know specifically what the returns were, but it's one that we just need to remind our clients that if they get any of this information and they're told that it doesn't, they don't have it. Fortunately, if they don't have copies, we should have copies to in order to get the issues resolved. One thing that, if nothing's in there now, is I'll give as kind of a Q&A with one of the last item that Mark had spoken about under our agenda with the crowdfunding. And one of the areas that one of the questions that came back from one of the offices was, wow, we thought you were going to be talking about the 1099K and the new rules related to that, as opposed to just crowdfunding. And that's one that I know I've been asking the IRS for guidance since probably early January. And when we were talking to Joint Committee on Taxation, their comment was, well, if it's income, it's still income and it still needs to be reported. But it's more involved than that, because if you're selling your own personal items, many of those are going to be sold at a loss, such as selling things on a Facebook marketplace, even people that sell tickets through StubHub. So it's a bigger issue than what I know some of the people really feel it may be, but it's one that we need to keep our eyes open and ears open, just because it's going to be one that we're going to need to be able to advise all of our clients sooner rather than later as to how to address these issues, because it will be coming up and they will be getting 1099Ks, because gone are the $20,000 thresholds along with a volume threshold. Now it's basically $600 and they're getting a 1099K. And as much as the Venmos of the world are saying it's not going to happen, if you send $50 or $100 to a child in college, or you're out at dinner with some friends and it's, oh, here, let me Venmo you $100 to cover dinner. They're saying it's not going to happen in those areas, but knowing how these worked in the past and the fact that many sent out 1099Ks this year through PayPal, it's going to start happening. And we just need to make sure that we know how to answer it, other than, and that some have suggested, oh, just show it as an in and an out, but that's not really the answer either. So just stay tuned for that one. Hopefully at one of the upcoming IRS meetings, they'll finally talk about that.
And we had, explained to them, Steve, unlike a stock, for example, which, okay, we know it runs into situations where basis can't be found, but very often basis is readily available. When somebody is selling Steve, I'll pick on your flyers, somebody's selling their flyers tickets, the client is always going to tell you, I bought it and sold it at the same price, leave me alone. And we got to consider this as practitioners and the implication on us. When it comes to a lot of these items, the clients are just simply going to tell us, I don't want to look it up, just put down that I bought it for the same price that I sold it at. And we have to attest to that, and whether the IRS looks at it someday, that's not the issue. Okay. We can't base our decisions on whether they'll be examined someday. So, unlike, other things where basis is readily available, basis for these items is not readily available. And all of a sudden, you're going to be attesting to a tax return with a whole bunch of basis information on it that you haven't done any due diligence to check. And that's kind of scary going forward as practitioners, Steve.
Well, on our end, fortunately, our role, as we all know, is not to audit the tax return. It's to prepare it based off of questions, data provided by the taxpayer along with inquiries. So there's really, our end isn't as severe as the taxpayer. And in many of the cases, they're going to say, I sold the tickets at a loss, which they can't claim the loss. So it's difficult because if they sell it at a gain, they're supposed to pay tax on the gain. But if they sell it as a loss, they don't get any credit for it, which kind of starts pushing towards some of the items of a flat tax system.
Thank you, Fran, and thank you, Steve, for the presentation today. So our next quarterly meeting, folks, is going to be live. It's going to be our first live meeting in well over 2 years. So we're very excited about that and very excited to see everybody in person again. The meeting dates, for those of you that don't have them, they're going to be August 3rd, 4th, and 5th. We'll have that up on the website very soon. There's going to be held in the Philly area, specifically at the Huntington Valley Country Club. We're currently working out things as far as how the days will work, recreational events, because we want this event to be fun. We want the events of NCCPAP to get done, obviously. We want the business of NCCPAP to get done. But the idea of the quarterly meetings is that we often get more when we're having dinner together in our discussions than we even get when we're talking during the main part of the committee meetings and such. So this is really going to be the first time in a while where NCCPAP can get out. We can actually, shake hands, hug each other, things we haven't done in a long time. So we're very much looking forward to that. As far as future meeting dates after that, we are looking to go to the Dallas area in October, and in January, we will be more than likely back in the Boca Raton area. And then more than likely next May, we will be in Bethesda again to have formal DC meetings. Although again, keep in mind, we might be looking to have DC meetings before that Bethesda meeting. So that's our future meeting schedule. Please come out to a NCCPAP meeting. You do not have to be on a board, on a committee. As far as the question in the chat, all our board and committee meetings, other than very few ones that are closed, obviously, will also be available on Zoom. So you can always attend virtually. We welcome you to do that. Although we do obviously like to see you in person, particularly this first time to be our first meeting in person. So please, consider coming out to an event, consider joining a committee as well, and kind of help NCCPAP as we move forward into the future. And again, everyone, thank you so much for attending today. And I look forward to seeing you at our next NCCPAP Now event.